Well, good morning, ladies and gentlemen. We've got another episode of the Wilson Weekly for you all, and we're just over a week away from the spring selling season, where we typically start to see an increase in listings from the top end of the market. So we've got plenty of information and data to go through with Dr. Andrew Wilson again today. And how are you, Doc? What's been happening in the economy this week?
Well, we've got plenty of news, really. Some interesting news on the policy front as well. Of course, we had a meeting of the heads of government last week to address the chronic supply shortage that we have in our housing market. Probably, not a lot of surprises, and unfortunately, probably not a lot of solutions in terms of outcomes. But at least they're talking about it and putting forward some propositions. Let's keep our fingers crossed that it works. But there was some other good news that came out of that meeting in terms of addressing the issues in the rental market, which, of course, are the consequences of our shortage of supply. We know rents are going through the roof, and there is a serious shortage of available accommodation in the private rental market. So some policies there we can discuss, and, of course, that's good news. But we also had the good news, I mean, is that they're actually discussing it. But we also had the latest unemployment numbers come out. We've been discussing perhaps some queries around the ABS data that we look at on a monthly basis, whether or not there are some issues with their seasonal adjustment models. Again, that question was raised with the latest data on the labour market. It is very volatile at the moment. And, of course, seasonal adjustment models are supposed to take out that volatility. So, it is a response to the adjustment process post-COVID, because that sort of screwed everything up in terms of the seasonal adjustment modelling. But, and, of course, we're going to have an exclusive this week as well. We're going to look at the latest home price data so far over August, over the August quarter, see how we're tracking on house prices and unit prices. Of course, we'll have the full model released in 2 weeks' time, so we're all excited about that. But it will be the final month of winter, and as you mentioned before, we're just a week away from the spring selling season, the official start of the spring selling season. But I reckon it's already started, to be quite honest. And the last weekend's auction results give us that sign that the green shoots are there, and onwards and upwards. So lots to talk about today. So I guess we should get started.
Certainly are seeing some of those green shoots with the auction clearance rates, aren't we, Doc? It's very
mate, and it's not so. It is the clearance rates, of course, but it's the volume of listings, as you mentioned at the beginning of the show. That that's the sign that we see is more property coming into the market, and we're seeing that clearly in spades in terms of auction numbers, and that was evident last weekend with a big surge in auction numbers, but really didn't impact clearance rates. So plenty of buyer activity out there, plenty of strong appetite for available property, regardless of higher numbers coming into the marketplace. But let's not give too much away. We should get up and running with the latest insights into our housing market from My Housing Market. And we are all about the current state and future prospects of housing markets. And, of course, the key word there is current state. We try to get as close to the action as possible in terms of what's really happening here and now in our housing markets. So let's get started. Government initiatives to increase supply. We know Australia has this chronic undersupply, this chronic shortage of homes. We're struggling to house our population. It's a long-term issue that's really been building. We're not alone here, particularly the US. A number of big cities in the US are struggling with the same problem. And, of course, the principle, the basic law of supply and demand in terms of economics tells us that when we get that shortage of any particular product, it puts upward pressure on prices, and certainly prices and rents are responding now. And one of the to what is a chronic undersupply of property. And the problem is that, once you get behind the eight ball in terms of that undersupply scenario, it's very, very difficult to catch up, particularly in an environment such as Australia's demand environment, where we are seeing a cyclical revival in demand for housing generally. And of course, we've got a remarkable surge in migration, which is fueling obviously more demand for properties. So, and that of course is the post-COVID surge in migration. So governments are under pressure to address these issues, which are, there's no arguing amongst anybody now that this is an issue, and it is a very significant issue. So governments have acted to address that in means which I'm not really confident that it will achieve a balance between supply and demand in our housing markets anytime soon, really, if ever, because we've got a lot of negatives that are reducing, not just positives adding to supply, but we've got more negatives coming in that are actually making it tougher to get more homes, sort of family-ready, occupant-ready homes in our markets. And, of course, one of the big issues there is high building costs. So even if we can get approvals for homes, builders are struggling to make a profit because of high building costs. And, that makes it even. So it's the old story, it never rains, it pours. And that's what's happening now in terms of supply. But the governments did meet under the auspices of the federal government last week, and they came up with another policy aimed to hopefully improve our supply of housing in this country. So federal government's now offering state and local councils $3.5 billion to fast-track the construction of now 1.2 million homes. So the target before was 1 million. They're already behind the eight ball, and that was announced earlier in the year. Over the next 5 years, they've upped that to 1.2 million.
The aspirational target.
That's the aspirational target, which means it's a good theory, but we're aspiring to this. But if it doesn't work, it's just an aspiration. So it's not sort of written in stone or concrete or whatever. But the issue really there is, and what they're going to do is provide performance bonuses to encourage states to accelerate land release, planning and approval processes to build well-located homes. So I guess that means, and that's the problem is, it's one thing to start accelerating supply in a managed scenario, but you really need the market to be driving this, because it's not just about more new homes. It's about new homes of the type and in the places, in the locations where people actually want to live. And that's what market forces, create, because it's driven by demand, and the private supply responds to that demand. So they've recognised that, well located. Well, okay, what does that mean? But it does mean, where people want to live and in the types of properties they want to live in. But it does recognise at one level that it is all about certainly those planning and approval processes. And this is the big problem, of course, that you can talk all you like and provide all the incentives you like, but at the end of the day, there's that those local barriers to new planning, the not in my backyard brigade. People are very connected to their neighbourhoods, to the characteristics of their neighbourhoods. And it's very difficult to shift that local flavour in local communities. And we see that that's the same issues that they have in the US in a number of cities, that the planning process really is in the hands of local communities. And they are very difficult to shift because they are obviously connected to their neighbourhoods and to the nature of their neighbourhoods. So they're not wanting to have particularly higher density housing in lower density areas. And of course, the problem is that's where people want to live is in these sort of aspirational neighbourhoods and aspirational suburbs. And, they want to take advantage of what are typically larger plots of land in those areas. And that means, higher density, medium density, or even high-rise developments. And that's an anathema to many in those that are already there in those local communities. It's always interesting that I've done a lot of research in this area that once people struggle to get into these areas, and they're all about shifting the planning rules, the local planning rules, to allow more supply. But once people get into these areas, move into these areas, they then become averse to more higher density development. So it's like, once you're in, and that's it. Yep. We don't want any more people coming in, sort of thing. But that's the big problem. And the issue with that is that that the Constitution tells us that state and local governments have control over land planning. So we'd have to really get serious about this. We'd have to have a referendum to change the Constitution to allow the federal government to have a say, or a primary say, in planning. And they could therefore say, okay, this is the way it's going to be. I'm sorry, but we have to look at the big picture. And that would be very difficult to get through a change to, which all referenda are difficult to get through. But that would be particularly difficult because people would be worried about a change to their local neighbourhoods. So they'd be, it'd be unlikely to get through. So this is the immovable object, I guess, that we have, is that you can only offer incentives and suggestions to try to get more development, particularly higher density development in particularly middle and inner ring suburbs, where all the infrastructure is and where people really want to live. And local governments and even state governments that push through significant changes to planning at the local level tend to pay a political price for that, and lose their representation in these areas. So, look, it's what my point is. It's a good theory. Yeah, okay. Here's $3.5 billion over 5 years. Now, if you divide that up into the states over 5 years, it's not a really huge amount of money to actually tackle these issues. But I guess the federal government can say, well, we did something, we tried to do something, and in a way they've handballed it through to local level developers. Well, not local level developers, but local level planners, because this is all about local level governments now being told, well, it's up to you. Here's the money to do this. Don't blame us if it doesn't work, because we've sort of put it fair square in the hands of those that are in control of planning, which is really the big problem. So, yeah, okay, it's something. It's I guess recognising the problem, recognising the essence of the problem, which is those planning laws to a large degree. And look, a number of jurisdictions also, when we talk about land release, are wary of extending the metropolitan area further out. There's a lot of sort of green issues around that. In Melbourne, they speak about the green lungs of Melbourne, which are the semi-rural outer suburban areas. So there is a sense there that, hey, we don't want to impact the green lungs, as it's called, by pushing development further out. So again, this is a political issue that a lot of people are attached to that concept, and therefore are negative about extra development. So it is a political problem at the end of the day at the local level. And I say good luck with all of that and that proposition, but I'm certainly not confident that those targets will be reached. But of course, in 5 years' time, we would have had another two elections. So it all is about, I guess, matching the issues with the electoral cycle. Just to say, well, even though they might be going to election and their target's not there, they can say, well, we haven't reached the end of that 5 year period yet, so you never know what might happen. The government, as well as those performance bonuses, that $3.5 billion performance bonuses to state and local governments, have also offered $500 million in a housing support program, which is to encourage those state and local governments to fast track the construction of amenities and services to support new development. So that's infrastructure. So they've been given $500 million to provide infrastructure to new development areas. So look, it's a recognition of the problem, and the real problem is that, and we've discussed that many times here, is the constraints of local planning laws to get higher density, particularly, and I don't mean just high rise. Higher density can mean medium density. And medium density is the sort of the missing link in our discussion on new supply, particularly for downsizers that are always looking for a medium, that would prefer a medium density option, but within those sort of areas that they've been living in. And that's, difficult to do. I mean, a developer obviously gets more bang for their buck typically with a high-rise development. But there are many varied issues around this particular problem. And as I said at the beginning, the other issue we have is that we've got these very high building costs, which although they've eased, house building costs have eased, they're still rising at more than 10% a year. And typically prior to COVID or prior to the stimulus package that created all these issues with building costs, the home builder package of the previous government, prior to that, building costs would increase around about 2% a year. And of course, that was something that builders could manage. And that's why they would offer fixed term contracts around the prospect of a 2% increase without high profit margins. But, when you're going from a typically 2% increase in your cost base to a 10% plus increase in your cost base, it's very hard to absorb that, and we're seeing a lot of issues with a number of builders in terms of their profitability. So that's the latest news on trying to improve supply, try to, I guess, put a little bit of downward pressure on prices and rents. Not sure that's going to happen in the short term or in the medium term, particularly when we have this revival in the cycle now. And of course, with this record surge in migration coming into Australia, which, of course, those migrants need to be housed. Now, the other thing that was discussed at that meeting, which is something we've been pretty front and centre about here, is the prospects or the proposals for rent freezes, right? So, of course, there's been a lot of discussion, a lot of media hype about, we're going to get a rent freeze. We discussed last week that the Scottish government had actually instituted a rent freeze last year, the previous Scottish government, which is no longer there, big surprise. But the latest government now has decided in Scotland that it didn't work and that they've repealed it. In fact, one of the significant critics of this policy were tenants who it was supposed to help. And tenants were saying it was, the worst thing because it actually meant that there was even fewer rental properties because it was a discouragement to investors. Yeah. So there are few investors. It poisoned the relationship between landlords and tenants. So landlords were less inclined to do repairs, etc. And also landlords were less inclined to stick with a longer-term tenant. They were instead looking for a tenant that could cover the increases in costs, which, of course, in Scotland also included higher interest rates. So the Commonwealth state governments have said, no, this is a no-no. So they've actually come out and just said, no, it doesn't work. They've actually agreed with what we've been saying for months, is that if anything, this would only reduce the number of investors, the number of investment properties, and make rents even higher. So they've said no. It's an idea that would make things worse, not improve it. And all state governments have put their hand up and agreed with this. Even those left of centre governments, such as the ACT, have said no, it wouldn't work. It'd only make things worse. They've all agreed that there can only be one rent rise a year. They've restricted to a single rent rise every year. Most of the state governments, all state governments, I think now have that policy in place, and also improving what a landlord has to do in terms of the maintenance and the amenity of their properties, and also protecting tenants to a large degree from what are considered to be unfair evictions, etc. So that's good news, because we can no longer have that as a fear factor running through, what if we get a rent freeze? That's now been, and all credit to those governments that have recognised that and aren't going to take that silly decision that, of course, started off with the Greens the Greens are still, oh yeah, this is terrible. We need a rent freeze, et cetera, et cetera. But of course, they're just trying to create a differentiated product from everybody else, knowing that it would never be enacted. So they could never say, oh, well, this didn't work. So, and of course, all the Greens are looking for is more public housing, more government money spent on government housing to offset the problem. But of course, that's cloud cuckoo land stuff, because we would need billions and billions and billions of dollars to get anywhere near our undersupply or get anywhere near to supplying our population with housing. And they would have to be, built in areas where people didn't really probably want to live.
Not well located.
No, that's right. And the sort of properties, like those old housing commission towers that we still see around in some capitals, which people wouldn't be, obviously, highly motivated to live. So that's good news that the rent freeze is off the table. It was interesting also that there was some discussion that maybe we should, and this is what Graeme and I have been discussing for a while now. We've certainly been proposing that maybe rather than these silly policies that would act as a disincentive for investors, maybe we should have some policies that would actually incentivise.
To actually increase some rental supplies to create less pressure on the rental market, right?
That's right. And we've had a number of governments, and of course the Victorian government comes to mind particularly, that have increased taxes on investors. And of course, Premier Andrews has been, in the spotlight recently, trying to defend his increases in, and we've spoken about this, his increases in taxes on investors. And he seemed to be, at one stage, very dismissive of any issues there. He's a little bit more circumspect about it now, recognising, okay, well, yeah, we do have a problem in Melbourne, particularly with investment properties. But he's saying he's not prepared to, because there's been discussion that maybe they should start easing the tax burden on investors to create more investors and therefore more rental properties and to create downward pressure on rents. But he's saying, no, well, we need those taxes to pay for hospitals and schools, which is fair enough. And also the big picture is, and we've discussed that here also, is that Victoria is in a pretty shabby position in terms of its budget. So it does need, to raise its tax base, and part of that, of course, is to, I guess, target those that they perceive can pay it, even though, there's a lot of question marks around that. But certainly, at least the discussion generally is moving towards incentivising our private rental market by providing, perhaps some tax relief to investors. So let's watch this space. It might come along, and that would be good news if we could get more investors into the market, providing more rental properties and taking some pressure off rents. It was also interesting that last week our outgoing Reserve Bank Governor, Philip Lowe, also agreed that rent freezes didn't work. So he's on that. He's on the hobby horse of the negative about the rent freeze. I'm afraid Governor Lowe has to remember that perhaps he has a little bit of a finger in the pie that created this problem in the first place, because he was cheering on APRA and the banks when they created that credit squeeze in 2015, which really ran through for the best part of 5 or 6 years on investors, when the APRA, who are the financial regulators, the risk managers for the big banks, instructed the banks to reduce lending to investors. And really that went on for a number of years. And Philip Lowe was certainly right behind that, agreeing with those macro-prudential policies. So he's had an about face in regard to his opinion on the private rental market, with the rent freeze being a disincentive. Perhaps we would have been in a better position if they had been a little bit more, incisive in terms of those macro-prudential policies, the credit squeeze that occurred on investors, which certainly reduced the number of investors in our marketplace, and also, of course, meant fewer rental properties, meaning higher rents. But I guess that's just another issue that we can discuss in terms of the governorship of Philip Lowe of the Reserve Bank, which, of course, has now ended. But I just thought it was interesting that Philip Lowe is on that. The rent freeze is a negative, in terms of a disincentive for investors. When, as I said, he was clearly there and with other factors too, holding interest rates too high through 2017 and 18 because of fears of a revival in the housing market. So interesting that at last we're seeing some sense from governments and policymakers in terms of our private rental market. So I've had a bit of a rant and a rave about that this morning, but I think it's good news for investors. They don't have to worry about the rent freeze issue going forward, and that there's now an increased sentiment or a rising sentiment that investors must be incentivised so that they can provide us with the private rental stock that we so sorely need at the moment in this country. So let's now move on to the latest economic data. We had the labour market data out from the ABS for July. Interesting stuff here, surprisingly to some degree, but again, it reinforces the volatility that we've seen in labour market outcomes over the last few months. And as I said, I think we've got to look at those seasonal adjustment models as maybe being a cause of this volatility. It is a problem because we had it, everything was turned on its head during COVID. Weaker months became stronger months became weaker months. So that, of course, upsets the seasonal adjustment model. And we need a period of time where it sort of gets back to normal, and that's a couple of years before we can, I guess, have full confidence in that ABS seasonal adjustment model. So having said that, I think we need to take the results with a bit of a grain of salt, but they are what they are. So we just have to sort of run with what they're saying at the moment. So we saw the unemployment rate actually increase to 3.7%. That should be the July unemployment rate, 3.7%. Jobs were down following the recent surge over over May and June, down sharply by 15,000 over the month, fewer jobs. And the number of unemployed increased also, up by 36,000. These are big numbers. And yet they follow big numbers the other way. We had very strong falls in the number of unemployed over May and June. And we had obviously very strong increases in the number of jobs created over May and June. And now we've gone the other way. And of course, we can expect volatility with the raw data, the original data, but the seasonal adjustment modelling is supposed to actually, smooth out those ups and downs that we get from month to month due to seasonal factors. And the New South Wales was the clear labour market leader as usual, and as I said, more questionable results from that seasonal adjustment modelling. You can see there that we've basically flatlined in terms of our unemployment rate. It's still near, that record low of 3.5%, which we had last month, and well above what we've really seen. We have to go back decades and decades to see these sort of low unemployment rates. So it's still a very strong economy. And as I said, we're questioning whether, in fact, it's perhaps overstated the decline. But look, at the end of the day, this is actually good news and we can see there that New South Wales remains the top performer, 3.2%. Interestingly, we saw every other state increase compared to a year ago, its unemployment rate, whereas New South Wales was lower. And the ABS has sort of said, again, it's looking to find excuses for, I guess, this volatility. It's blaming school holidays. It's saying that July, the increase was about school holidays. Like I said, school holidays come at the same time every year. So I'm not sure why they should be saying all of a sudden it's changing, because school holidays have always occurred in July. Yep. So whatever. You know what I mean? And then they're saying, it was the same in April, which also has school holidays where we saw a fall in employment. So hang on, doesn't the seasonal adjustment model supposed to account for that every year with things that are the same? So they're saying that, maybe there's some changes happening around school holidays. Well, I don't know. Like I said, we've been calling this into question, not just with the labour market data, but also retail sales. The data also there has been questionable. I also think perhaps, the wage index data to some degree. But anyway, like we said, this will settle down hopefully within the next year or so as we get back into a post-COVID sort of normality. But I don't think they can be blaming school holidays, which
No.
have always occurred in April and July for the volatility in it, and it's significant volatility. I mean, we're not just talking slightly up or down. Big numbers have either gone up or gone down. But look, we'll see how the trend evolves over the next couple of months to see whether, obviously we'd be thinking, okay, well, there'll be a big bounce back over August. But we'll see what happens when that August data comes out. And just on that, I think this is good news for interest rates. I think, the fact that we've got a weaker labour market, I think that actually would make the Reserve Bank feel a little bit okay. We've got the retail sales data out soon. If that's also a little bit weaker, I think the Reserve Bank will feel that their decision to pause again for interest rates over August was justified. So 3 pauses in 4 months, I think with the latest data showing a weaker unemployment rate with the wage index, although that's June quarter, with the wage index showing annual wage growth falling or down, still rising, but not as quickly as it was in a superheated economy. I think they would be suggesting, well, okay, we can justify that on the data now, which means I guess the prospects of another pause are clearly there, given this sort of weaker data that's come through. But hey, it is the Reserve Bank, and who knows what's going to come. But I would suggest that this is better news in terms of mortgage holders for the outlook of interest rates. That this again supports perhaps another pause for September. But we'll see what happens with those retail sales data numbers. And also we have inflation numbers that are coming out next week as well. So that will add to the big picture and, of course, support the decision of the Reserve Bank going forward. So we've got our mid-month update on prices, house prices. National market continues to report strengthening results. House prices rose again over the August quarter to date. So it's to the middle of the month. 4-month data will come out in 2 weeks. And now it's up over 7 consecutive months. So there's obviously no doubt about the revival, 7 months in a row, the national price. And the rate of increase was just a touch lower than the previous month. So it's really been a steady winter market, the increase over the August quarter compared to the July quarter, not as strong as the June quarter, but we would expect that to some degree given the winter market and the impact of particularly fewer higher priced properties that are in the market through winter. But we'll see that reverse over the next couple of months when higher priced properties enter the market. So there are the numbers. National house price up over, look at that, that's a real revival. Now well ahead of where it was a year ago, the national house price. And these are all the bits and pieces. Sydney up 0.5%, Melbourne up 0.4%. Brisbane, good performance there, up by 1.7%. Hobart down again by 3.4%. When we look at this year so far, Sydney's up 8.2% so far this year for house prices. So well on track to match a 10% rise. And it's also ahead of where it was a year ago by nearly 5%, but still down by 2.5% from its previous peak. And the previous peak of the Sydney house price was over the March quarter last year. So we're still to get back to record prices, but certainly starting to move towards record prices, and that should happen over the next couple of quarters. Melbourne similarly up by 3.6% so far this year. Brisbane up strongly, 6.2% this year so far, and Perth up 6.3% so far this year. Melbourne's got a bit more work to do in terms of its previous peak, but there's no doubt that housing markets are up and about. And this is the winter market. So we're going to come into a stronger period next month, as I said, particularly with more higher priced properties coming into the market. And that will put upward pressure on prices. And as I said, I think that we'll start to see peak prices being realised finally, in most of those capital city markets, particularly the larger capital city markets. Brisbane's already at its record peak of 1%. It's now 1% higher than its previous high price. And Adelaide's up 1.6%. So that gives you some sense of how markets are performing on a cyclical basis, and certainly another positive month for houses
Well, we're nearly up 4% over a national house price stock, so very different to what some of the Brisbane, the bank forecasts and that we were hearing last year in the lamestream media. So very, very different to what we were hearing, isn't it? Looking at the data that you've presented us here.
Well, everyone's moved on. This is the point. There's no discussion about how wrong they got it. They're back on the bandwagon, and it's all been forgotten. But it shouldn't be forgotten because it's easy to follow a trend as we're into now. But it's when the outside forces make it problematic, such as COVID and all those other higher interest rates. And that's where the banks particularly just got it so wrong. It made them look ridiculous. And I mean ridiculous. And their brief is really to have, professional and expert insights into the property market, and they certainly don't have that. They've been so wrong, it's ludicrous. And it's one thing to say, okay, we got it wrong, let's move on. But, we have four big banks, that's it. They control our home lending, essentially. And you'd think at the end of the day, they would get it right in terms of what's happening in the housing market. Not only did they not get it right, they were shockingly wrong in terms of their predictions. So it is what it is. And as I said, they've just shrugged that off and moved on again. But they've had a significant long-term, record of being, absolutely wrong in terms of their outlook for housing.
Well, you'd be particularly upset if you took their advice and stayed out of the market, trying to time the market, taking advice from the bank forecasters, wouldn't you?
Or sold in a panic, So that's right, and that's what we try to do here is provide credible insights into the market based on the latest data, and that's why we attempt to be right most of the time. So units were flat. And this might pick up, but unit markets showing a little bit of that winter freeze, perhaps. National unit prices were flat over August. That was steady. We'll see how this works out when we get the latest data in 2 weeks' time, but certainly not performing as well as houses for a change because the unit markets really led the charge. It's interesting, though, I think that when we look at some of the capitals, we can see that and Sydney was flat for units over the quarter. Melbourne actually down by 0.6%. Brisbane up again 1.5%. That Brisbane market's really chucking along at the moment. And Adelaide as well. So and they continue to perform strongly on an annual basis, and they are both ahead of where they were, or they're at record levels. So Brisbane and Adelaide medium unit prices are at record levels. So particularly good news there for Brisbane, which has now a substantial unit market. And Brisbane units are up 7.7% so far this year. So a very good result there for the Brisbane market. So we'll finish off now again with our weekend auction markets. And we've sort of alluded to that, those green shoots of the spring selling season appearing, a more solid to strong capital city auction results, providing that evidence that we do see at this time of the year of an uptick in market activity. And, of course, spring is traditionally the strongest period for housing market activity through the year. Those pre-spring weekend auction numbers are now rising strongly. We sort of are into the spring selling season now. That we sort of, the real spring selling season does start the second and last weekend, second to last and last weekends in August. And numbers are rising strongly, and that's our sign. And that's because those confident sellers are keen to take advantage of all that competition amongst buyers for available property. And, of course, that's why prices are rising. And, of course, the interesting thing is that you're getting all these buyers at auctions, right? And only one of them can be successful. Yep. So if you've got 5, 10 buyers looking at a particular house and bidding on that house, then you're only going to get one successful bidder, and the other, 10 or whatever unsuccessful bidders, they're off looking at somewhere else to live, right? So it's like, that only increases the momentum in terms of the market, and that's why we're seeing these, good late winter results. So this is the data. A big number of auctions in Sydney. In fact, this is the largest number of auctions we've had in Sydney so far this year. So this is a year high number of auctions in Sydney, over 700. A lot of those commentators that couldn't explain the strong auction clearance rates earlier in the year were blaming low listing volumes as being the reason, but they can't point the finger at that in Sydney.
Well, I think it was back in Wilson Weekly 34. I think Graeme made a bit of a prediction that this time there would be auction clearance rates over the 70 to 75% market, and here we are in August coming into the spring selling season, and look at what we're seeing.
Well, that's the interesting thing is that we've had a big number of auctions, the biggest number for the year so far, and one of the biggest numbers over the last few years. But of course, that accounts for COVID. And we have a 78% clearance rate, which is one of the strongest clearance rates we've had this year also. So higher numbers of auctions are being absorbed by buyers. So the more auctions, the more properties you're throwing at the market, it's not affecting the appetite for buyers. And that's why sellers are coming into the market, because they know they can get a good price. They know there's plenty of competition for their property out there. And that's a very good result there, 78% off the back of a big rise in numbers, auction numbers. And as I said, that's the largest weekend of auctions that we've had. So I'm interested to see what we get this coming weekend, which is the last weekend of August. Melbourne also had a rise in the number of auctions, steady at around 73%. Big rises there in Brisbane. As I said, these are all signs of the spring selling season with higher auction numbers. Again, a steady and encouraging result there for Brisbane, which typically has lower clearance rates at 66.5%, and Adelaide another 80% result off the back of a big increase in auction numbers, and Canberra steady over the period. So when we look at the results so far this month for weekend auctions, the weekend auction clearance rate over the first 2 weekends of the month, we can see we're actually tracking higher in Sydney than we did over July. So it's actually the first sign of that rebound, that spring rebound in the Sydney market. Melbourne around about where it was over July. But of course, when we look at the last year, we're well ahead of where we were last year in terms of clearance rates. And that's the real story why we're getting higher prices. Similarly, in Melbourne, well ahead of a year ago. And Brisbane significantly higher than a year ago, tracking around about where it was last month so far. Still 2 weekends to go, of course. Adelaide, just another, keeps on keeping on with those 80% plus clearance rates. And Canberra has certainly revived and is well ahead of where it was a year ago, and currently tracking higher than where it was over July. So there's no doubt about these results. They are real-time results, of course. They tell us what's happening in our markets. We know that it's a very reliable forward indicator of housing market activity. All you have to do is look at the comparisons with clearance rates now to where they were a year ago, and look at our comparisons with prices, and to see that validates the data. So another positive weekend. You can get those auction clearance rates on my LinkedIn site. Every Saturday night we get the headline results from the capitals, and then on Sundays we get the full report in terms of particularly the regional breakdowns for Melbourne and Sydney. So look out for those on my LinkedIn site. And as we always say to finish off, if you're looking for more information and insights into our housing markets, we have a My Housing Market little app there that's available through Infinity. Graeme and his crew at Infinity. You can link into that through that QR code there. But you've got to get a password to access it.
There's an exclusive.
Yeah, so you've got to get it through, Graeme. But it is a great little app because it covers every suburb in Australia, the number of listings, current listings, and it also allows you to filter for types of property. So you can filter for a house, a townhouse, or a unit. And you can also filter for the number of bedrooms. So you can look at a one-bedroom, unit, or a four-bedroom house in any particular suburb, and it will tell you the median house price or the median price, the high price, the low price, and the number of listings. So it's a valuable little tool there if you're in the market, just to understand what's happening, what people are asking for their properties currently, and it covers every suburb in Australia that has listings. So get on to Graeme and his crew there, and they'll provide you with a password for that particular app as you join their team. So some incentive there from My Housing Market and the Infinity crew. Next week, we're going to look at July retail sales. We were going to look at average weekly earnings this week, but we've run out of time. Too much stuff to look at, really. And, of course, those latest weekend auction results and any more policy announcements that are made. But it'll be interesting to see how those the final weekend of winter, how that works its way into the auction market at the weekend.
Very interesting.
But some very positive results so far. Well, last weekend. And you can almost smell the cut grass, can't you?
Yes.
Coming forward. So that's all from me this weekend. It's been another great show. Lots of insight. Some good news there for mortgage holders, I think, with the data. And some good news there, I think, also for the rental market and tenants. Firstly, with perhaps the prospect of more supply, but governments recognising that rent freezes are a big no-no in terms of easing the burden on tenants, and that maybe starting to realise that they need to provide more incentives, maybe some tax relief for investors as part of the solution to putting some downward pressure on rent. So that's all from me. It's been a throaty session again, and I now look forward to a big glass of water to ease my sore throat. No, it's all good. So we'll catch you all next week.
Thanks very much, Doc. Appreciate your time again, and we look forward to seeing you again next week. As always,
Thanks,
it's always a great episode. Thank you very much.
Thank you very much. See you later.
See you next week, guys.